Ni hao. On behalf of MBG, would like to extend warm welcome to all of you and would like to thank leadership of Zhonghui for the opportunity to share our thoughts on the region. In terms of Middle East and UAE in specific, we are in the interesting, progressive and build-up of excellence phase of economy, where both FDI into the country and outside the country investment both are on the rise and in best ever phase than any time in the past. O's, Pearl, Oil, Sovereign and Excellence. Before I take you to current and future, it is important to understand the region a bit. Pearl. Middle East was a pearl economy where pearl trading was key contributor to the GDP. Then most of the economies got the oil, and last 60 years, oil became the key, initially only selling and then now fast forward to today, value add of chemicals, plastic and fertilizers and now whatnot. Now is the phase where oil and sovereign wealth funds both are playing a significant role, and eventually diversification from oil will happen significantly in the next decade. Eventually excellence, that equality of being outstanding, will become full blown. How? Economy will be multiple fold bigger, locally as well as portfolio will be diversified, industry as well as industry-wise as well as geographically. Countries are specifically UAE is on the path of being anti-fragile. Country which become better no matter what challenges come their way. From oil shock to currency shock, corona to constant wars. UAE leadership has been blessed with tons of wisdom to swiftly maneuver and find the way professionally, politically and personal involvement of leadership by building key institutions to harness resources and relationship for betterment of their own people as well as humanity at large. In terms of institutional development, UAE has the biggest sovereign wealth fund in the world, $2.1 trillion out of the 5.2 of MENA region. China with Beijing is about 1.3 and Hong Kong 1.1. Riyadh is also equivalent to Hong Kong, about $1.1 trillion. In UAE, mainly it's Abu Dhabi Investment Authority, $993 billion, focusing on large allocation of funds. Mubadala, about $302 billion, strategic investment in multiple industries. Recently in August, they invested in China UCB Pharma. ADQ, $249 billion, focus on industrial platforms. These three have spent about $36 billion in the first 3 quarters of 24. Investment Corporation of Dubai, about $500 billion, which is a consolidation of government's portfolio of commercial companies and investment. Emirates Investment Authority with about $91 billion is the only sovereign wealth fund at the federal level. ADNOC, the national oil and gas company, has a checkbook of about $150 billion for acquisition. By 2030, sovereign wealth fund is poised to become $3.4 trillion from $2.1 currently. Industries that are in focus are financial, infra, real estate, energy, industrial technology, consumer and healthcare. And country-wise, India and China are just 4% of the portfolio. So the room for growth is immense. Currently, US is about 27%, UAE is 17% locally, and UK is around 8% are the major beneficiary. UAE currently with a GDP of 0.5 trillion is working real hard to develop it in the upcoming years through various programs and double it up. For programs like US Sentinel Plan 2071, Energy Strategy 2050, National Advanced Science Agenda 2031, Strategy for Artificial Intelligence. Since 2015, where FDI was about 8.6 billion, in 2023, it rose to about $30.7 billion. Another key theme that is emerging is diversification from the Western market. The Gulf funds are diversifying. Last year, Qatar Investment Authority has spent about $1 billion in Reliance Retail, India's largest retail chain. Abu Dhabi Investment Authority is setting up $4 billion fund dedicated to India. Mubadala plans to have a quarter of its assets invested in Asia by the end of decade. Gulf companies are also investing directly in Asia. Baldana Qatari agribusiness spent about $500 million for dairy business Philippines. Aqua, a Saudi Arabian utility, is building wind and solar projects in Asia region, and predominantly most of the suppliers for Aqua are from China. What are those project sizes and how Asia is moving in tandem? 3/4 of Asia's greenfield investment in Gulf last year was for manufacturing facilities, which will produce goods ranging from basic metals to electronics and car. Asian companies are flooding into the region to build infrastructure and set up factories, building vast amount of bridges and power plant to desalination system. The Gulf is investing heavily also in Asia to ensure access to the technologies and also profit from the growth of its fast changing developing economies. We currently at MBG has inquiries to buy assets in China. Roughly $500 billion worth of projects are currently under construction across the region, with almost 3 times as much in a planning stage as well. That has led to big deals for Asia construction giants. From 2024, China Energy, a construction firm, won a contract worth $1 billion to build a solar plant in Saudi. Samsung, ENA and GS Energy Engineering, South Korean firm, won $7 billion to build gas plant. L&T Construction has taken more than $16 billion of work across the Gulf, including green hydrogen in Saudi. In July, China Steel, the world's largest steel manufacturer, announced to double up the investment in new facility in Saudi Arabia, about $1 billion. Mitsui & Company and GS Energy announced they will build ammonia facility alongside ADNOC. Various Chinese car makers are building factories in the region. More than money, with the Gulf states has already have a lot, Asian companies are offering in the region their technical know-how. Also, another key theme is changes from America to Asia. Greenfield foreign direct investment from Asia to Gulf rocketed from $4 billion in 18 to about $26 billion last year in 23, out of which 17.5 is from China. By contrast, investment from America went from around $4 billion to about $7 billion in 2023. Also another theme, import flow changes. America and the 6th largest economies in EU last year consumed only 8% of its export, down from 27% in 1990. Between 2018 and 22, Gulf imports from America and EU rose from $128 billion to around $130 billion. Import from Asia soared from $169 billion to about $247 billion. In conclusion, CREAT, capital, regulation, entrepreneurship, elite class plus technology, works together in tandem, and we in turn today's time call it as a public-private partnership. UAE and Middle East at large, most of the big businesses are owned by government and families that are elite, driving growth as well as playing part in evolving regulation in line with global standards. Now about MBG and Zhonghui, we are consulting. We bring knowledge, understanding with values and integrity. So consulting is the underpinning catalyst to connect the dots and help build the future. So let's do our bit to be the bridge of connecting minds and help build wealth from the wealth for all of us. The party has just begun. Thank you and all the best.